Hi, good evening, guys. This is SK. Uh, this is our first educational video where I will be sharing with you guys a very basic details of what a thought process behind a professional trader is, and what we will be dealing with in a bigger picture at the end of this session, and at the end of this program, where we have to transform how we think and how we take the market. It's very basic. It's going to be very brief, not very detailed, but like we're gonna touch very important parts of the market where you're gonna start thinking and believing in a different way altogether. So this is some kind of a disclaimer, I'm just gonna hold it for a minute. You can read it, that this is not an advice to buy or sell anything, and like all that. So guys, there are two sides of the market. There is one professional side and a retail side. Retail side is you and me, but the professional side is a guy sitting in the big hedge funds and whatnot. And professional side is very simple. There are no magic indicators. We are not looking for any candlestick patterns, or we are not looking for hammer candle, or dodgy candle, or this candle or that candle to enter or exit the market. We are looking for a different kind of target, support, resistance, and whatnot. Whereas the retail side is trapped with some kind of a magic indicator which gonna come one day and gonna make them profitable overnight. And if that indicator is true, this gonna happen. If that indicator is false, this gonna happen, and whatnot. And this retail side, this fear of losing, this fear of not knowing the professional side of the market, what happens is that there are many newsletters, there are many guys, gurus, pundits, and whatnot outside in the world, which will promise you everything in the world, and they'll say, give us $200, or give us $1,000 or 5,000, whatever. I don't know. If you're making money from day trading or swing trading or what not, you really don't want to charge arm and leg to make some kind of a money. Like, let's say example of Mr. Albrook. He's charging $99 for his some kind of a session. He do day trading session, right? But that's been forced by the other co-traders, requested him that, please, Mr. Albrooks, could you please do that? And $99 is, I believe, is a reasonable price. It's just 2 points on EMINI trade, and he's a great trader. I really have a deep respect for him. So there are two sides, retail and professional. You guys are in the retail side, so we have to pull you out from the retail to the professional side. Retail side, is distracted with news, with gurus, pundits. Retail side, the fear is that they always want to get into the trade when it's confirmed. But when it's confirmed, you're entering the trade later and you're exiting it later as well, because you don't know. You are very emotional. You're not there to lose the money. And then the TV news, everything starts, okay, it's time to dip buy, and then you get into the dip trade. The problem with the retail guys are that they are opposite to our friend, who is the friend is of our market, who tells us everything what's exactly happening in the market. And trend is our friend. So we do not want to be opposite the trend of the market. Let's say if we are in the bull trend in an overall picture in the market, then we do not want to short the market, short the stocks or something like that, anything whatever you're trading. And if the trend is downwards, you don't want to buy things. You don't want, in a bigger picture, you do not want to be on the opposite side of the trend. And the other thing is, after losing so much money, the retail trader gets so panicked, so stressful, and disheartened and whatnot, that he or she does not want to lose anymore. So what happens then? Then they take more harshful trades. Then they take more more uninformed trades where they lose more. So this is the retail side. This is the struggle what retail side is facing. Let's say, like this is the chart, guys, like which is in which I know lot many of the traders have lost a lot of money, and professional traders have made so much money as well. So like what is this? When this was trading around 25 $30, this was the bargain hunters, like those who do a very detailed study about the accounts, about the debt, about the cash flow, about the functioning, about the CEOs, about the CFOs. They are the bargain hunters, like Mr. Warren Buffett, like there are many other traders out there, right? So they buy a business, they invest in a business. Let's say a business is valued at $100 million, and the share value is about let's say about $25 or something like that, and they believe in that business, like Chipotle they believe, like Apple they believe, like they find the business which is underperforming right now, but the fundamentals are so strong that the future is very strong in that business, the profit going to increase. So what they do is they invest, like we invest in a property. Let's say you invest in a countryside, but that there are going to be population going to increase. The hotel motels are coming over there, McDonald's coming over there, IKEA coming over there, Walmart gonna come over there, or any of these big guys are coming over there. So that means they have done their homework of the place, of the countryside, that this countryside the metro is coming, so population gonna increase. So what big investors do, they invest in the property, they invest in the land. So similar way, these bargain hunters, they know what's gonna happen with the what are the probabilities of the business, how business are functioning, and what are their accounts and what not. So they buy here, and then they like then after they buy, that news goes to the fund, fund managers, pro traders, bank industry and all that. They start buying that trade as well, and we guys come at the end, retail, like you and me, we are buying it here. What happened next? Like when we are buying here, this is Amba, this is the trade, this is the guy, which recently we bought, recently we saw everything. What exactly happens is, when we buy here, gurus, pundits, TV news and whatnot is saying buy now, buy here, it's gonna go high, and we all buy here. All the retail traders says, okay, this is next Apple, this is gonna go to 500. And when this thing happen, then they say it's a dip buy. When you buy here, then retail traders are buying here. Whereas these bargain guys, these pro traders, these fund managers, they are shorting the market here. At the end of the session, I'm going to explain you this guy as well. So they are shorting here, but the TV is telling us to buy as a dip. And then after buying at the dip, we bought here, and we are saying, okay, now it has to go up. There is no way this stock is going down. Over here, we have a denial. We are saying, okay, maybe a little bit more dip buying, but this has to go up. This is an emotional fight for a retail trader versus the professional trader shorted this market here. He saw double top here, he shorted the market here, he know that we are going down. He'll wait until we have another fund managers covering the shorts or bargain guys coming in. Over here, when we are here, when like either big guys are buying or they're trying to do something, what they are doing here is they are news gurus, pundits. What they are doing, they all are there is a phone ringing here. Let me just this is weird. Give me 1 second, guys. Very sorry about that. Alright guys, sorry about that. Okay, so what happens here is, like this over here right now, gurus, newspaper, your news pundits, everybody's saying, okay, sell it now. The retail traders, what they do is they start selling this guy because they think, okay, I have lost enough, I cannot lose more. There is no way I'm losing more. The thing is, they're not looking at the chart. They're just listening to TV, they're just listening to fund managers, they're just listening to news, and they're acting accordingly. Whereas at the end of a day, when we are here, it's again attracting the fun bargain hunters. But the bargain hunters will look into the detail, will look into the fundamentals, will look into everything, and they will see that if this company who was trading at 125, there was something very good in this company, that's why it was trading at 125. So there is a chance that this guy can go back up. So where were we? We are at the stage 1 here, where the bargain hunter started, and this stage gonna go up. But we never buy with the bargain hunters. What we do is we wait for bargain hunters to give us a breakout. We take this trend, we rally this trend, and after this trend we are out. If you're a short seller, if you know how to short, you short the market here. So bargain hunters back in there. This is Amba. This is today's picture. Today I took. But do we invest in this right now? No, we do not. Because that thing I'm gonna cover in the upcoming things. The other last thing, retail trader is looking for a magical indicator. These indicators, you're just choking your chart up. Your focus is more on what your next magical indicator gonna give you in the market, and that indicator gonna become a retirement plan for you. But you see, this is green line is a 200 moving average. Many of the gurus and pundits and who not, they say, okay, go for 200 average. We are above, we are down, we bounced here, and I know, I know so many people who bought it here. They said it's bounced from here, and I was shorting this guy. If you go back in my Twitter account, I was shorting this guy all over here. So we shorted this guy here at the bounce, but the retail traders were saying, okay, we are above 200 moving average and we are going up. But we are not. These all indicators does not have any meaning. We have to get rid of all the moving average. These are not the leading indicators. These are the lagging indicators. We need to get into some leading indicators which are very calculated. We're gonna discuss it in here later, which are telling us who is powerful, bulls or bears. Are they buying big lots or they're buying small lots? So we have to get out of these indicators. No indicators, no moving averages whatsoever. We're not gonna focus on that. Let's see what we have in the professional side, guys. A professional side, day or swing trade, they just follow the institutions. They're not looking at any candlestick patterns, or they're not looking at any moving average, 30 crossing 50 or 50 crossing 200 or 200 doing that and this and that. They are not, these TV guys, these news guys, these pundits, they can say 100 things, they can say 200 average above and down, and this is a resistance right now, and this is not. But the institutions, when they buy these all moving average, these are lagging indicators. They do not have any meaning at that time. So it's better to see what institutions are doing. It's better to see what time frames have the important, support, resistance, targets, pullbacks, trend lines, trading range, breakout mode, trend. So, we have to think, we have to start thinking like the professionals. We do not just take all the indicators out of your chart. We're gonna see what is the support, what is the target, what is the pullback, what are our trend lines. We are not covering here right now, but we're gonna cover all these things very soon, and then we're gonna see when the breakout is happening, when we're gonna see is this the trend or not. But remember, trend is our friend. So let's go further. Guys, this slide is the most important slide for day traders or swing traders. Different time frames. As a day trader, we open and close your position daily. We trade only and only 5-minute chart. We will not going to trade 1 minute. We will not going to trade 2, 3, 4 minute. We're not going to trade 15 minute. We're not going to trade 30 minute. What we're going to trade is 5-minute chart. And the decisions of the 5-minute chart will be made from 4-hour chart. Guys, copy paste this, print this page, do whatever, just memorize this, that we're going to trade as a day trader. We're going to trade 5-minute chart, and the decisions, bull trend, breakout, bear trend, breakout, whatever, we're going to make from the 4-hour chart. For the swing traders, hold time is 1 to 10 days. We trade daily chart, but again, the decision we make is from 3-day or from a weekly chart. Guys, I cannot stress this enough. You have to keep this slide as a magical slide for you guys. This slide is the most important slide, guys. Please focus on this. We need to get through this. Day trading, 5-minute chart, decision from 4-hour chart. Swing trading, daily chart, decision from 3-day or weekly. That meaning that all the trend lines, all the targets, all the support resistance, everything where we're gonna find out for the daily is from the 4-hour, and for the swing is from 3-day and the weekly. We're gonna see this in the coming videos. So guys, stocks or market, like it's always it's always in either of the stages, either of the 3 stages. The stages are trend, trading range, breakout mode, up or down, trend. So you have to understand that we are always the market is always either in a trading range, or it's about to break out, or it's in a trend that it's a one directional and we are just going towards one direction. So the bigger picture need to be known. For any swing trader or any day trader, you need to understand that what's happening. If you're a day trader, you need to understand what's happening in your 4-hour chart. Is your 4-hour chart is in a breakout mode? Is your 4-hour chart is in a trading range? Is your 4-hour chart is in a trend? If your 4-hour chart is in a trend, what will you do? Let's say your 4-hour is in a bear trend. What will you do? You will short every bounce in 5 minutes, and you will buy low. You will short higher, you will buy low. You will short higher, you will buy low. Reason, the bigger picture is we are going down. So any trader, day or swing trader, can only be successful if they know these things, And remember, guys, trend is our friend, So we cannot go against our friend. This is very important, guys. Most of the swing traders are never satisfied with their strategies, as these will work sometime and sometime they will not, I have few friends, I get so many emails that SK, this strategy worked for me then, but it is not working now. This strategy worked for me then, it's not working now. It's working now, but it never worked then. So there is so much going on with these guys. What they do is they make a month, then they lose another month. They make in a trade, then they lose in a trade. But the problem is that we are not looking at the bigger picture, For any swing trader, the main thing is to see weekly chart or the 3-day chart and see the market cycle. Market cycle is something which is most important. Let's say our market cycle is very bullish, So when our market cycle is very bullish, we need to look at the stocks which are bottoming. We need to look at the stocks which are breaking out, We need to look at the stocks which have a sufficient pullback after a good rally, and they are resting and they are ready to break out again to the upside. So what happens with the market cycle? Market cycle tells us that 75 to 80% of the stocks, they follow the market. And if the market is in a trend, So that meaning that 70 to 75 to 80% of the stocks, they're going to be in a trend. Either a good trend or a weak trend, but the trend will be there. So at that time, we're going to have our scans. We're going to have our homework done before that, where institutions are buying in bulk, where institutions are buying in a big lots. Like that. When market is in a trend, or in a breakout mode, the institutions start accumulating big number of shares in certain companies, and then what they do is, after the market trend is over, they sell their position in these stocks. Like I shared with you guys PSX. Mr. Warren Buffett bought at 72 73. I bought with him. I sold at 88. Right now it's trading down again, and right now Mr. Warren Buffett is again accumulating, but we don't want to jump into it because the market is in a bear trend. Market is looking for a bearish. So I am not buying that. Amazon is a great guy. Amazon, Facebook, these two guys are on the top radar. I have, when the market gonna get set to bounce, I'm gonna buy these guys. These guys gonna make us good money. But right now, if we buy them, we are against the trend. Trend is our friend. And what is the trend of the market? Market is in a pullback mode. So market is in a pullback mode. You do not want to go long in the market. Whereas if you find any weak stocks, they will go very down in these kind of situations. Let's say, what about the day traders? This is very important for the day traders. Day traders, I talk to many guys, here and there. They say, SK, day trading is not for us. Like we lose a lot of money as a day trader. The problem is, day trader is most of the successful day traders, they are superb at swing trading. You need to understand the basics of swing trading. You need to understand the bigger picture, so that what is the market doing, what is market cycle is. Are we bullish, are we in a trading range, are we in a trend, are we in a breakout mode? We need to understand that as a day trader, what our 4-hour chart is doing. If you're trading EMINI, if you're trading stocks, you need to understand what our daily, weekly, 3-day chart is doing in a bigger picture. Then you go ahead and do the day trading in that stock. You cannot just wake up in the morning and say, okay, without knowing the market direction, without knowing what's exactly happening in the market, and start buying or selling. That will be very suicidal. You can give away all your money to the market, and it's never gonna get right, because we're gonna be against the trend. But remember, guys, I'm again gonna say that trend is our friend. So we want to follow the trend. Once we follow the trend, we know trend is upside. So buy every pullback as we're going up. Trend is down, sell every high, and trend is our friend. We're gonna go down. As you know, on Saturday I sold SPY. We bought some puts, and we made some money on that. We had this 2026 target from when we were trading 2100 something. So we had this target way then. So we are still going down because the trend is down. We need to follow the trend. For beginners, I would advise that you should just focus on the trend, and trend from a bigger picture. Like you cannot have a trend from 5-minute or 15-minute or 30-minute chart. These charts will not go. If you're very well trained, if you have very good experience in the market, still you need to know what your 4-hour chart or daily chart is doing to be very successful day trader, so that you can see that what is the major trend in the market, what is the major trend in the stock. So for beginners, look for the trend from a day or a 4-hour chart. From that, we're gonna go to trade. Let's say the trend is 4-hour chart is very bearish. Let 5-minute chart be bullish as much as it wants, but we're going to be bearish. Reason, the bigger picture is bearish. So 4-hour chart is friendly. 4-hour chart is very supportive when you are doing a day trade. Guys, why I like trading E-mini? This is a very beautiful article I read some time back. I will be calm. You can just pause this video here, read this. It's very informative. I really like this. Mr. Albrook is trading this. I'm trading this. Like we just going to focus as a day trade. There are many things. There are many traders out there who are teaching how to short the falling knife or how to get the falling knife or this and that. And one day you make, one day you don't. You cannot scalp with HFTs. They are just doing with the news. I would say, why to do with the news when we can learn trading E-mini and be successful and be very calm and be very profitable every day. Like, give me your 2 months, promise me your 2 months, and I promise you that I will give my 100% to change this over so much. It's going to be beautiful, guys. So there are some do's and don'ts, which is a part of a discipline which swing traders does. Swing traders, they always trade with the market cycle. You cannot trade against the market cycle. So before you open a swing trade, your first rule is you're going to see what is the market cycle. They do not manage their trades during the daytime. During the daytime, 5-minute chart will go up and down, 15-minute chart will go up and down. You will go many times in red and you will go many times in green. If you have full confidence in your swing trade and your setup, what you have pegged, you will not going to manage your swing trade during the daytime. Whereas, we're going to manage our swing trades, we're going to honor our stops and all that after the market is closed. We're going to manage all that. This is how the professional side thinks. They do not go in and out and look at their swing trades 100 times a day. Every swing trader should scale out on profit. What happens is, when we see the profit, we don't understand what are the targets, when should we take our profit. Like, it's very important for a swing trader to lock their profits, to lock their profits so that, and move their stops accordingly to the break-even point or above or down, so that at the end of the day they can end up most of the time in a green trade. Try not to hold before the earnings. This is very important, guys. I know a few guys who just try to hold some stocks, when the earning is out tonight or tomorrow morning. Now we are dealing with HFTs. These are computer generated orders. You really cannot we cannot trade that. It can gap up and down and whatnot. Why to hustle so much? Why to stress ourselves so much? Whereas we can have a peaceful time, let the HFT gap up or gap down, but the after effects after the market gonna open, give us so much money to make that we do not have to really worry about like overnight gapping up or gapping down. So most of the professional traders, they do not hold the position. Most of the professional traders, they sell 30 to 50% of their position as the stock moves up. As we're scaling out, most of the traders, what they do is they lock 30 or 50% profit right away and they move their stop to break even. Likewise, when they move their stop to break even, it's for sure that you're gonna end up in profit, as you have taken profit on 50% of the position, and rest of the 50% position, we are at our breakout point. And guys, volume is the key. Swing traders, volume is the key. You cannot trade thinly traded stocks, which are trading 100,000 or 70,000 or 80,000 shares a day. These stocks can be manipulated. These stocks are very deadly stocks. We need to trade stocks. There's a smart way to make money as well. There are swing traders who are just trading Apple or Google or Amazon and Facebook. They're making tons of money. They're just focusing on few trades, these blue chip stocks. I trade blue chip stocks most of the time when I go long. I don't look for any growth stroke, which can go up $10 today and tomorrow it's down $30, and my bank balance is all down. We really, swing trader should be a very peaceful trader. He should have peace in his mind. Over the weekend, if he's holding 10,000 shares, 1,000 shares, 100 shares, he should able to sleep good. He shouldn't have to worry that what's going to happen tomorrow. There always going to be some kind of a discomfort that like you're holding this big position, but you really want to invest yourself in some blue chip company. When they are pulled back, buy them. When they are high at the trading range, at the ceiling, just sell them. We're going to cover these all details in our upcoming next videos. So for a day trader, day trader as a professional side, they gulp out their 4-hour chart. They have a best knowledge of the market cycle. For a day trading, if you say, SK, we can only be a good day trader. For a good day trader, you need to understand the market cycle. You need to understand your 4-hour chart. There is no way you're trading 4-minute, 2-minute, 1-minute chart. You will not even look at those. You will just look at 5-minute. Side by side, you look at 4-hour chart. In our next video, we're going to do some live trading, and we're going to see that how these things follow. Trade as minimum as possible, as minimum charts as possible. Most of the traders I know, pro traders, they are trading only one chart, which is EMINI. Maybe I'm trading EMINI, that's why I know most of them who trade EMINI, but they are just trading one chart. For me, I honestly just like to trade one chart, but sometimes I get distracted. I trade other things as well, but it's advisable, highly advisable. It's your discipline going to make you a successful trader. Promise yourself for next 2 months you will only going to see at EMINI. Let oil give you 100 points, let gold give you 100 points, let Apple give you 100 points, let Google give you 100 points. You will, from the morning to the evening, you will just look at EMINI chart. You will just do your recap in EMINI. You will not be bothered about what Apple, Google, Facebook, Netflix is doing. You will not see what oil, what gold is doing. Nothing whatsoever. Your focus for next 2 months, if you are a day trader, I'm requesting you, your focus should only be on EMINI and the side platforms like SPY or SPX you're trading. What they do is they get ready with their trend lines and targets before the market open. Day trader should be ready at least 1 to 2 hours before the market opens with their trend lines. You cannot open the market and see, okay, what I'm doing. You cannot rush yourself. First 5-10 minutes you need to wait in the market, see how price is acting according to your trend lines, and then you jump into it. You just don't jump into the market without being prepared. You all see, yeah, that like on Friday that I bought some gold, and like I was not prepared, but if a trader like me who is 90% or 60-80%, whatever you want to call, profitable, I mean always in green, can do these kind of blunders if he's not prepared. So like anybody who's new trader, he can do much worse to his account by not being prepared and trading uninformed. Most of them, they trade 5-minute chart and with 4-hour chart trend lines. We are talking here about professional traders and how they trade and how disciplined they are. Make maximum use of the volatility in first 1 to 2 hours. Know which stage 4-hour chart is in. What they do is, if you guys have noticed that like first couple of hours the E-mini, when market opens, it's very volatile. The reason is there are many traders who have done their homework, and they are taking big positions. As a swing trader, it's very volatile, so much is going on. If you have drawn your 4-hour chart, my goal is to make you successful trading first 2 to 3 hours and call it a day. From last so many years, at 12 o'clock I call it a day. So that's what I want from you guys, that afternoon you can say, okay, I call it a day. Always have separate accounts for day and swing tradings. All the professional traders, professional side, they do not have the same account. You cannot have swing trades and day trades in the same account. Personally, I take all my swing trades in IB, and I trade all my day trades with TOS, with Thinkorswim. So guys, this is one of the charts, like this is a value investor, like Mr. Warren Buffett is buying. This was in a trading range. This is a breakout. This is a trend. So who is our friend, guys? Trend is our friend. In this weekly chart, we are trading daily. Remember, we are trading daily. All these tails on the weekly gave us a confirmation that we are going higher. All these base here, tails here gave us a confirmation we are going high. This was a weekly breakout with the stop here. This gave us a confirmation we are going high. So remember, trend is our friend. For swing traders, weekly chart is the guy who we should be focused on. We're going to have all our trend lines. We're going to have all our charts, weekly and 3-day charts for our swing trades. We will not see what day chart is doing. We will take our position from day trading, but our targets, trends, everything going to be from the weekly. Day trader can get pullback, day trader can go up, day trader can go down, but if the weekly support and resistance is good, we are good. This is another chart, guys. This guy was, more bigger trading ranges, more effect we see here. This STZ guy, if you guys have followed me enough in Twitter account, you know that I buy these guys so often. We have taken these swings so many times. So this was a trend. So trend is our friend. Weekly in a trend. So that means daily any pullback is coming, we are buying. This is a trading range. This is a breakout. Then this is a trend. This is a trading range. This is a breakout. So right now the market situation is that this guy is dragging, or it's going to go sideways right now. But basically the thing is, this guy, from last 7, 8, 9 months, about a year before this, last year in 2013, 14, 15, we were in a uptrend. All these uptrend was a market cycle in uptrend. So market cycle in uptrend, these good stocks, they gave us a very, very good reward. So again, we go to the same point. We need to know, our swing trader need to know their market cycle. If they know where the market cycle is, it's in a pullback, right? Like right now, market is in a pullback mode. If you're buying any blue chip stock or any best setup you're buying, your setups and strategies gonna fail. Reason? The market is in a pullback mode. Once the market gonna go in a trend mode or in a bullish mode, any bull setup you buy, it's gonna give us a very, very good reward. So what we need to see here is that swing traders can only make good money if and only if they are in. I didn't hear that. Okay, if and only if they are in with the cycle, with the market cycle. So we need to be in a market cycle. That's very important, guys. This is a guy, right now we are trading. You see we were in a trading range here. What happened here? Can you guys see what happened here? What happened here that we went up here? Why? What happened here? And right now something is happening here as well. Pause this guy. You can just see and write on a paper that what do you think happened. Think. Okay, we'll go next. What happened here is, this is the breakout. What happened, we saw the breakout here. From this breakout, they tested this breakout, and after this testing of a breakout, we test this high. We saw this breakout, and this breakout gave us another trend. What happened? This was a breakout. Then we saw the deeper pullback. Why we saw the deeper pullback? Maybe the market was seeing a deeper pullback. There can be many reasons. But you see, where the breakout happened, this was the breakout point, right? We saw bulls came again back in, and we saw this breakout. This was what? This was a trend. In this trend, this is a weekly chart. In a weekly chart, we saw this kind of a trend, and what's happening, right? What happened here was that every pullback was getting what? These tails were telling us that we are going high. When we see these kind of tails in a weekly chart, we buy that guy. When we see this kind of a breakout from a weekly chart leads us to a swing trader in a day chart. We do not make our decision from a day charts. We make for a swing trader, you place your order from a day chart, but your trend lines, your targets, everything is from a weekly chart. Very important, guys. So what's happening right now? Can you see what's happening right now? Okay, we'll go next. This is the BIB ProShare Biotech, guys. What's happening right now here is, we saw this. Right now we have the targets below, supports, which are 27, 30, 33. This guy might going to attract a lot of bargain guys right now. This is the top priority guy which I'm focusing right now, which can attract so many bargain guys. Like after we get a good pullback and we're ready to bounce in the market, this is a guy which going to give a lot of money to everybody. Look at this guy. This is going to get some this is already getting accumulated. This is getting accumulated from bargain hunters, not people like you and me or pro traders. Once we have a once we have the breakout from this red guy, our next target is 57, then next target is 69, this next target is 74. What I want you to do, guys, if you are not comfortable making trend lines, do not have any moving averages make your chart look rounded. So we want to make it like this, in the lines, in the horizontal lines. So every line you see here, the left hand side, make your supports, make your targets like these are the supports, right? So we can bounce from anywhere here. Honestly, I really want to buy this guy here as a weekly and have a stop somewhere about 24, 25, because I know this is getting accumulated. This is ready to bounce. I was ready to bounce here as well, because it was very aggressive. This was very, very aggressive, guys. So when this is so aggressive, there are big buyers are buying, heavy accumulation is going on. But right now what I really want to look at here is, if we go above 50, then there is one way to 57. Closing above 57, it can give us sideways to up. Then this is a swing trade to 69. After 58, 59, you can hold it, this guy, until 8, 9, 10 points and let it be there. So we make our swing trades not from day charts. We make our targets not from day charts. Our all targets for swing trades going to be from weekly charts. Our trend lines, our support, our resistance, everything is from the weekly, because we are looking here at a bigger picture. If you're a day trader, if you're a swing trader from a daily chart, you need to look at the bigger picture, and the bigger picture is your weekly chart. This is a chart, guys, like which Mr. Warren Buffett bought it here. Like this was the guy who really gave me a lot of money. I bought it here as well, when it was trading way low here, about $4, $5, $6. So I bought it here. I kept it for some time, I believe 2 years, something like that. I made good money in this. This guy right now, once it break from this point, it's gonna go very high. So this is right now in a trading range. So from a trading range, we see a breakout going to happen here, and then the ultimate target we're gonna see 38, 39. It's going to be more than 100% growth in this guy over the time. Mr. Warren Buffett is invested in that. Many of the big institutions, many of the conservative guys, they are investing highly in this company. I'm going to share with you guys. I am personally invested in this guy. Most of the times what I do is I buy low, I keep it for some time, I sell high, buy low, sell high, buy low, sell high. The time we're going to get all-time high this time in our market, this guy going to explode, and I still have a few thousand shares of this guy in my 401k. So like the point is to have these guys which are ready to give you 100-200% profit in 2 to 3 years. These are the real investments. These are the investments which you need to understand. These are the investments which really brings which really brings a change in your life, which gives you money. Like, you're buying a property, your father bought a property 10, 15, 20, 30, 40 years ago. He bought it for $100,000. Right now it's worth $1,000,000. But you need to understand that he has a courage to buy at that time. So we need to have a courage to buy right now so that our kids can see some good future. These are the targets we have. If we get the breakout from here, I mean, why I'm showing you these horizontal targets, the thing is I want you to get that what I'm looking at. This is a weekly chart. I'm looking at all these supports, this guy, ultimately this guy. So like before I take you to the next level of the trend lines and all those wedges and all those 3 push 2 push down, you need to understand the chart. These charts, all these highs, this high, this high, this high, you will see, weekly chart giving us a bigger picture. So with the bigger picture, what we understand is that, like once we go above 21, there is no tail, there is no bar. The next level, the next ladder, the next elevated ladder is at 24. After we go above 24, the next thing is at 27. Exactly what's happening here is, whoever value investor bought somewhere here, he's still holding a negative position. Once he gonna see that, like I'm here at 24, like let's say, you bought gold when it was at 1700, you're still holding your gold. Next time when gold gonna go to 1700, if it goes, you all gonna rush and you're gonna sell your gold. You're gonna say, okay, it's gonna go back and I'm gonna buy this time and I'm gonna make some money. But if the buyers are more in the market and they start buying gold, the gold can go to 21, 22, 23. Or if at 1700 we have too many sellers, it'll get a pullback or it'll go down. So similar way, right now, if this guy, like it poke through this and we have too many sellers here, it'll go down. But this is the, this is the level, like, every level it's going up. This is level 1, level 2, level 3, level 4. So every time it goes above, this becomes the support, this becomes the resistance. This trade above, this becomes the support, this becomes the resistance. This trade above, this becomes the support, this becomes the resistance. So these are the levels, these are the ladders which we have to, which stock has to go every step ahead, because we have other buyers who bought it here. They are very eager to be in a break-even position and sell their position. If we have good enough volume, we all gonna, I'm not covering a lot here, I'm just putting you through the mind setup, through the thought process, that what we're going to do, and we're gonna get that. I'm invested in this, Mr. Warren Buffett is invested in this, but I'm invested in this guy for a longer term, 2, 3, 4 years. I don't even care, like maybe my daughter is 20 years old, I'll see where this guy is trading. I have just invested in this guy. And this is Bank of America, guys. Bank of America is the guy, this is very undervalued. This guy has a lot many assets. This is one of the biggest, not exactly biggest, but one of the biggest banks of America. So this guy is trading very low. This has to break out. We're just waiting for the breakout from 21. From after 21, it's going to be a rocket ride to 39 eventually. So the nutshell here is that we need to understand the market cycle. No matter are you a swing trader or you are a day trader, if you do not understand the market cycle, if you're against the market cycle, you're not going to make money. We need to understand the market cycle. For a swing trader, always the bigger picture comes from 3-day or a weekly chart. For a day trader, bigger picture comes from a 4-hour chart. We cannot trade if we are not ready with the bigger picture. We need to understand the bigger picture of the market. Trend is our friend. We cannot go against the trend. Most important is we have to follow the institutions, guys. Whatever I'm making today, I have shared these videos, these slides today with you, just to bring you towards the professional side. Change your mindset that would put you out of the moving averages, put you out of the indicators. No indicators we need. For a day trader, we do not need no indicators. We just need to see what our 4-hour chart is doing. For the swing traders, there are few indicators which are some leading indicators we're going to use. I'm going to share here right now with you. So trend is our friend. Let me put you an example. Like this is accelerator, right? So like if you're standing here and you're going up, the trend of this is it's going up, and if you start trading it downwards, it's going to be very, very hard for you. Eventually you might come down or you might give up, but why to struggle so much? So guys, trend is our friend. If we can get at the right time in the trend, we do not have to do anything. Are we gonna make money as the trend itself, when the $1 trillion are invested in the trend, and that trend we also go up? We never fight the trend. Like right now, if you guys are following me on the EMINI, let me take to the next picture. Trend is a trend, doesn't matter up or down. These guys standing here, they are coming up, this guy is going down. Let's take this guy to this side. When these guys are coming up, it's going to be very easy for this guy to come up, whereas this guy has to struggle going down. Reason, he's opposite the trend. So we have to be with the trend. Right now, market is in a pullback trend. It's in a pullback mode. It's in a bearish trend. So what we are doing since 2100, you all notice that, you all witness that we are shorting the market. So this is what we are doing. We are being with the trend. Once there is a break of a trend, we're going to see a trading range. Once we see the trading range, we will know that, okay, if we get a breakout towards the upward, what's going to happen? It's going to become a trend, and then every pullback we're going to buy to our green trend line or all-time high. So guys, institution buying, selling, there's a very good indicator, which is a leading indicator, which track their buying is BOP. Like you can see institutions bought here when it was on a sideways, then it went up, institutions taking their profit. And when aggressive selling came, we saw this kind of a retail, like selling in a panic, and like news or whatever it came. So what I want to say is that we're going to cover our BOP and the combination of volume in our upcoming videos, upcoming session, where I'm just preparing you here for the base, so that once I start talking in my real videos, you all should understand that what exactly we are doing. Like, this guy I shared with you guys long back on the Twitter on December 17, that this is bottoming here. I believe we are at 90 right now, 93 or something like that, because accumulation started, good volume started. Like when BOP has a power, you see BOP was selling. Is it buying or what? No, these are the short sellers. They covered here. They short sell here. They covered here. They short sell here, but they couldn't take the price down, and then accumulation started, and then we saw the explosion towards the upside. So basically what happened, right now we are struggling, we are facing this resistance here, about 198, something like that. That's why we are seeing the pullback. Right now we are trading here. So if we would have taken this base, this bottom, just hold this guy in December 17 at 68, it went up to 98. It's about $30 in what, 3 or 4, in 6 months. In 6 months you have seen $30 gain. Like it's like if you buy 1,000 shares, you made $30,000. What I'm trying to give you the bigger picture is that if we know what institutions are doing, there are some leading indicators which we can share, which I can tell you, which I can discuss with you, which can give us the higher probability side. With the side of the price action, we can make a lot of good money. Guys, this is Amba. You see, how these guys were buying here, buying here, buying here, until here they bought. Then what are these guys? Whereas we are buying at the dip, these institutions are short selling. They are short selling. What happened here? These short sellers made some cover. Few short sellers came back in. Right now it's in a trading range. It's these small guys are accumulating this guy because they are thinking it's becoming a bargain deal again. It can go another $10 down, but it's still going to be a bargain deal. They are investing $1 trillion in the market, so they have the power to buy these guys at the bargain. We will wait this guy. We will see many of these guys when the BOP goes green, when the setup is good, when our weekly gives us a confirmation. Go for it. We're going to take 1 to 5 to 10 days swing and make our money. So bigger picture is for swing trades, institutions, for daily trend lines, and a 4-hour chart. That's the most important, guys. In our upcoming, like this is just the basic, right? To kickstart you guys so that you can get into that mode of making money. And I give you my 100%. Like I invested my whole day today to make this video and to give you this, guys. And like I'm working hard to get more and more. I'm sacrificing my family time to bring this up to you guys. Please give your 100%. I promise you guys, in next 2 months things gonna be different in your life. If you're a swing traders, in next 2 months you will be looking at, wow, I mean, like I have started making some good money. If you're a day trader, I promise you guys, I mean, I'll give my 100%, and there is a very high chance that you're gonna say, SK, I'm done with my job. I know I can make way more in 2 hours a day, and I can live my life freely. I have my financial freedom. It's not going to take years. It's going to take few committed months to become financial freedom. So guys, it's at the end of the day, it's all up to you, how much you give, how much you put your efforts in. I'm going to give you 100% of it. Like next week I'm going to share some stocks with you, some examples with you, but eventually what's going to happen is I'm going to give you at least 8 to 10 hour study material where we're going to have everything. It's almost done, so get ready guys. Now you all going to get my recap videos, very detailed videos. I'm planning to record my every day 2 hour day trading. I'm going to record what I'm doing and what I'm thinking, what I'm not doing. So in that case, you will see more. I'm giving my 100%. I just want one thing in return, is that you guys are being successful. Get your financial freedom. This is the way you can get it. Start thinking like a professionals. You don't want any indicators. You do not want to see a smaller picture, a bigger picture. If a bigger picture is bearish, let 5 minute 10-minute chart be as bullish as it want to be. We will short the hell of the market. If the bigger picture is bullish, let 5 minute 10-minute chart be any bearish. We will buy anything. Like, when we were at 1900, if you guys remember, I was shouting my lungs out that we're going to test the green trend line, and eventually we tested the green trend line. So right now there is a purple trend line down there. So we're going to see all that. So guys, I want your commitment. I'm making a study material which going to change our life. We're going to have live sessions. We're going to have so much, we're going to have our recaps, we're going to have detailed things. I'm going to make tomorrow, I'm going to make a quick video for day traders itself, that how to understand the daily chart and what I'm saying, I'm going to share my things on Twitter, but still you going to understand that what exactly I'm saying. I'm going to share those things with you tomorrow. Good luck, get ready, and let's get some good money, guys. Thank you. Bye bye.